Hi, I'm Jordan Bradford, and I'm here with Eric Burkholder, and we're Burkholder Wealth Management, and we're going to do a video here today on a specific topic, but it does relate to year-end tax planning. But today's topic video is donor-advised funds, and you may have heard that term before, but it's becoming, I would say, a little bit more popular, especially as folks are looking for some creative solutions to both minimize your own tax burden as well as do some charitable giving. So, Eric, tell us a little bit about donor advised funds.
And as Jordan alluded to, we are getting, it feels like the end of the year is a long way off, but it's going to get here before you know it. And if you are thinking about doing some year-end planning, you really should start now. So that's why we're going to do a few videos on year-end planning, and hopefully get them out to you in time to make some smart decisions. But so anyway, donor advised funds we get asked about a lot. So we want to give everyone a little background on them and why you may or may not want to use them, because it's one of those tools that I think a lot of times people feel like they should be using. Like if they're making so much money or they have so much assets, like they're told like, well, you should be doing this.
Right.
It's got that appeal, but it doesn't necessarily make sense for everybody. And so donor advised fund, in short, is going to be, they're all set up as a 501(c). Is that right?
501(c)(3). Yeah.
501(c)(3). And so it's a charitable organization, with the difference that it is donor advised, right? So typically, at the end of the year, you may be wanting to give money to Red Cross or your church or something like that. So you're giving money to a specific organization. You know exactly what that money is going to be used for. The donor advised fund is going to wait and take direction from the donor. The donor is advising where those monies are going to go, and it typically can go to any charitable organization.
Okay.
And so I think I start there because I think there's a lot of misconception where some people may just they're giving every year to their church. And they say, well, should I put this in a donor advised fund first? And the answer is no. If you're just giving annual gifts and you just want that goes straight to the same charity or a handful of charities, you're just adding a layer of complexity in there. So that's the first thing I think people feel like they should be using a donor advised fund when it might not make sense. But where it really comes in handy is when you want to give large gifts, and you don't necessarily want it to go all to the same place or all to the same place at once, right? Maybe you sold a business, maybe you had a very high income year, you went into a higher tax bracket. So you say, hey, I want to give what I would typically give over 3 years in 1 year. And what the donor advised fund does is allows you to take that deduction in that high income year, but then you can keep the money in it, you can invest it, it can grow, or you can just leave it in there and then divvy it out as you normally would have over 2, 3, 5 years, while getting that tax deduction in the current year. So that's typically the most often case where we see people.
Okay. Yeah, I think that makes a lot of sense, and I think that also maybe goes a little bit into the question of should everybody be trying to lump in their like large donations into 1 year? Is it better to spread those out year over year? Can you maybe give us a little bit of perspective on maybe how taxes come into play with that?
Yeah, exactly. Good question. So it really comes down to each person's individual situation, and what we really look at is those tax brackets. And typically, when you're tripping over into a higher tax bracket, you want to look at those years as maybe a year to give extra. Now, and another good point there is if you're consistently in the same tax bracket and you're not able to put enough into that donor advised fund to where you're getting into a lower tax bracket, other than the long-term growth potentially, like you're not necessarily getting a tax benefit for giving all that in 1 year versus over 3 years.
Got it.
So
yeah.
You really want to look at where you're tripping over into a higher tax bracket. And that's why it's especially useful when people have very high income years, they sell a business, something like that. And you're almost guaranteed to be in a higher tax bracket with a liquidity event like that.
Yeah. So I think maybe a couple of the maybe red flags, I would say, for lack of a better term, if on your own personal financial situation, would be that if you're maybe around like really close to the different marginal brackets. So whether you're jumping from 22 to 24, 24 to 32, and that's a much bigger jump than the 22 to 24, of course. But if you're in one of those like really close areas where any given year you could jump back and forth between two brackets, is a great like maybe something you should be looking at. And if you see that happening year over year, you may be in the ballpark of wanting to look at like a donor advised fund.
Exactly. And like I said previously, some people, they have the charity or the few charities that they know they want to give to, and they have no problem giving that all at once. If that's the case, there's not really reason to flow it through the donor advised fund. Just give it straight to the charity that you want to give to.
Yeah. And it probably also makes a lot of sense for those folks who have really large fluctuations in their income year over year.
Right.
I think if that's your situation where one year you might make 150,000 and the next year you might make 400,000 and then the following year maybe it's down to 200, but it fluctuates pretty wildly year over year. It sounds like maybe donor advised funds are a good option for you in those really high income years to potentially maybe front load some of your contributions to charity and reduce your taxes at the same time.
Yeah, exactly. And it goes back to every person's situation is different. It really comes down to the individual's plan. And like I said, I think there's certain things that sound sexy, and people think, well, donor advised fund, I should be doing that. I'm making good money.
Right.
I have a lot of assets. But that's not always the case. I think some people set them up and then they don't really get used because they shouldn't have been set up with.
Yeah.
I think another few other points I'll point out on the donor advised fund. One is they are good for donating non-liquid assets potentially. So, I'll give an example of real estate, right? So maybe you have a property that you've owned for a long time, it's debt free, it's appreciated a lot. You want to just give that to charity. Well, you could sell it and then get the cash, which we would never recommend because you're going to pay the tax on it.
Right.
Two, or you could donate that building to the charity, which that charity most likely is not set up to manage a property, liquidate it, hire realtor, brokers, and that sort of thing. So another good option for a donor advised fund is if you have a non-liquid asset, even like private business ownerships or potentially restricted stock. Again, there's a lot of caveats to this, but what you can donate that to the correct donor advised fund. And a lot of these donor advised funds are set up and have experience to liquidate these non-liquid assets.
Yeah,
so
that's
then
great.
You get the tax deduction, you don't have to pay tax on it, and then the donor advised fund is going to help liquidate that asset, and you still get to choose where that money ultimately goes.
Yeah.
So that's one thing to think about, which again, typically is we're talking larger donations, but not always. Just it could be illiquid assets. And then for estate planning, I'll just mention as well, when you're looking at moving assets out of your estate through a charitable lead trust or charitable remainder trust, and we won't get into the details of those right now in this video, but you're going to need a charity to be the beneficiary of those trusts. And you may not want yet to specifically name, who that's going to.
Right.
A donor advised fund can be that charity, and so then that would give you the ability to have some flexibility down the road with those estate plans. So
and I think another note too with larger estates, and when I say larger estate, doesn't necessarily mean tens of millions of dollars, but if you've got maybe a few $100,000 as a family that you've decided we want to start giving this money away, we want to figure out what the best solution for this is, but maybe you've got multiple people in your family with different charitable inclinations. Maybe somebody wants to give money to like the American Cancer Association, or wants to give money to Red Cross, and you have some different charitable organizations. As a family, you can use a donor advised funds to pool the money together for charity, but then maybe allow each individual family member to pick and choose some charities that are important to them, So you can still accomplish that goal of giving, but also maybe allow your family to have a little bit more input, even the kids potentially.
Yeah, that's a great point. And one other thing I'll mention is, should you use a donor advised fund or a private foundation? When we're starting to get up into large
Yeah.
gifts, and there's pros and cons to each.
Mm-hmm.
Private foundation is going to have more administration costs. You're going to be required to give 5% out a year. The amount, the cap on what you can contribute and get a deduction is much lower. 30% of adjusted gross income versus 60% for the donor advised fund. And so there's the donor advised fund is going to be more cost efficient, more streamlined.
Yeah.
But then at the end of the day, like not as much control as a private foundation. So I think that's again, you just got to look at both. And I think some people hear private foundation. My net worth is X amount, so I should have a private foundation. And actually, a donor advised fund could be a better fit.
Yeah.
So there's a lot of things to consider. This video was more just to give a very broad overview of donor advised fund, and obviously, it can get complicated, but hopefully this gives everyone just a general idea, and at least to say, okay, yes, maybe, or yeah, no, I don't think I need to pursue that route.
Well, and if you stuck with us through to the end of this video here, I'll give you a quick little pro tip as well when it comes to these types of donor advised funds or just charitable giving is if you have a stock, as an example, that you want to give to charity, or you think that that's the route you want to go is to give stock, always give stock that has appreciated in value. You never want to donate stock that has a loss. And the reason why is because if you have a stock that you bought, let's say 5 years ago, it's lost money, you're like, hey, I just am ready to get rid of this. One bad investment, not a big deal, but I want to give some money to charity. Don't give that stock to charity. If you want to give that away, that's fine, but sell it first on your own and take advantage of the tax loss, because unfortunately, you can't gift a security at a loss and capture that loss yourself. So you always want to look at stock or investments that have appreciated in value as your best bang for your buck when it comes to the tax strategy of giving. Because then you can take advantage of, hey, I bought X stock for $100, now it's worth $1,000. I want to take advantage of that $900 growth and get that tax benefit. And that's where you can donate that $1,000 stock. You only paid $100 for it, but you don't have to realize the gain in there, but you do get to capture the whole amount as a tax deduction. So always look at those appreciated stocks. Those are the ones to potentially give in that situation, rather than stock that has gone down.
Right, exactly. And that applies to whether you're giving straight to a charity, to a donor advised fund, private foundation, anything like that.
Yep.
And hopefully we'll have some more videos before the end of the year, specifically on year-end tax strategy. So
yeah,
as always, let us know if you have any other questions on donor advised funds or anything we touched on today, and I look forward to the other videos we put out on how to lower taxes at the end of the year. Thanks.